Hello and welcome to the FXTG educational webinar. Welcome to the world of Forex with Roczniak, myself. General advice disclaimer. This presentation is aimed to be educational in nature and should not be solely relied upon as a recommendation or invitation to enter into a particular transaction or to apply to a particular trading strategy. You should not engage in trading unless you understand the nature of the relevant markets, the rules, and the application of those rules to the strategy or strategies you are trading, the products, and the full extent of your exposure to risk of financial loss. If you are in any doubt, you should seek professional advice. 1. The advice contained in our site has been prepared without taking account the objective, financial situation or needs of any particular client. And 2, because of that, the client should, before acting on the advice, consider the appropriateness of the advice, having regard to the client objectives, financial situation and needs. And 3, you should know that FXTG clients are required to read all product disclosure statements. There's 3 in total. Welcome and why listen to me. I am highly regarded Forex trader, trading coach, Forex fund manager living in Australia. I have over 15 years experience trading the financial markets, the Forex, CFDs, stocks and binary options and few others. My hands-on experience helped me to utilize simple and effective strategies to make money for my clients and investors. And last, my passion for trading the markets has become my career, and I can also help you become a successful Forex trader. Lesson 3, how to trade using Fibonacci Retracement Tool by Roczniak. It's myself. We'll go through the basics first about Fibonacci and how it came about, and then we can move into examples actually using the MetaTrader. Okay, what are Fibonacci numbers? The Fibonacci numbers, the sequence, is named after famous mathematician Leonardo Fibonacci, who discovered this number sequence. The sequence commences but has no end, like 1 plus 1 equals 2 and so forth. Then the sum of the previous numbers will create the next number. As an example being here, 1 plus 1 is 3, 3 plus 5 is 8, 5 plus 8 is 13, 8 plus 13 is 21, 21 is 34, and so forth, all the way, never ending. The numbers just keep on adding the numbers together, one after another. Now, Fibonacci ratios. If a number in a sequence is divided by its preceding number, the result is the ratio that moves around 1.618, the higher one time and the lower the next. By using the Fibonacci number sequence, we arrive at certain ratios that can be applied to the chart in order to identify trend, reversal zones, or support and resistance levels. The ratios we use to identify these patterns and to find support resistance levels are as follows: 0.382, 0.5, 0.618, 0.707, 0.786, 0.86, 1, 1.272, 1.414, and 1.618. To use these ratios in order to identify support resistance levels, one needs to know the price of an absolute swing high and an absolute swing low on the chart. A swing high in an intraday low that is preceded and followed by a higher intraday low. Now I'll take this off and show you some examples on the chart. Okay, that's the MetaTrader. Have you used the Fibonacci extensions?
No, I've seen it, but I've never used it. I tried to read up, and I didn't understand it.
You didn't understand it. Okay. It does get a little bit confusing. All right, so right here we've got a Euro USD chart. Let me make this probably a little bit smaller so I can see more of the chart here. Okay, basically what you do, if it's a downtrend, then you got to find the high and the low in the opposite direction. So if you were, there's the tool here where the F is, Fibonacci Retracement, and you draw from the bottom to the top, and that will show you the levels of where most likely the market is going to be heading and coming back. So the top of the level is the 0 and the bottom of the level is 100.
Okay.
And this shows you basically most support and resistance levels in the market, as it's like, what I say, this human nature where market corrects itself and or finds support and resistance. So let's just say that this part of the chart right here hasn't existed yet. Let's just say we only had just few bars in here. As you see, when this got expanded in here, you'll see the level of 23.6 right here, which sort of find support. Then you find the level of 38.2, which was quite a lot of support along this level here. And then the next one at 50, and then 61.8. A lot of the times you'll see that the market will actually come down to 61.8 before it actually goes back and tries again another attempt of going up. The main levels that I usually look for.
Trade? Are we doing that on a day's trade? I can't see, or is that a 15-minute?
So usually what happens is the market comes back up comes down, I should say, if you're selling it. Usually the first objective of the price would be going to a 38.2, next one would be a 50, and then 61.8. Obviously, if you were trading to use these levels here as targets, I would never use it as exactly where the line is. I would always try to trade it like in that 80 range of between it. So in other words, in this scenario here, we got 61.8, which is at the level of 1.24257. I would therefore make it my target, maybe something like that, about 10 pips away, maybe 5 pips away. As the market sometimes might touch it, and plus spread, you might not actually get it filled in. Like in this example here, the market didn't quite touch it and it rebounded. So it's always good to use the 80-20% rule. So if it's coming down at 38.2, I would put a exit just above it. Same with the 50, I would put it just above it. Or what you can do is take it to the first reversal of 38.2, exit half of your trade, and let the price keep going down towards the 50, and at 50 maybe you can exit the whole trade. Or if you can close some more of your trade down, move your stop loss to 38 and take the market all the way to 61.8 maybe. Does that make sense, Merv?
Yes, to a degree, but you know what I mean? Over what period does one use the Fibonacci? I mean, it can happen, that it's trading over 2 days.
Yes. Look, all depends on a chart you're using. Let me just get rid of this Fibonacci at this point. Where are we? Objects. Fibo, delete. Now, depending what charts you trade, so let's just say if you trade the 15-minute charts, bring the chart, squash it up a little bit, and
from there to use the daily trade, am I right?
Look,
the vertical lines down is what traded for the day.
Okay. the way it was written, I suppose it's assuming that you are trading as a day trading, but you can apply that across any time frame you wish, long as you've got a bottom and long as you've got a top at some distance.
Okay.
So, but mind you, you can also, let's just say, okay, I want to use a daily, which is my first top. Closest top is here, which is my closest bottom. That's right here. So you extend it from here, and the lines get. Actually, I'll do it right now. So I'm finding the first bottom before that one, the lowest bottom before that one, which is here, because this is already completed. So I'm looking for the previous one here, and I'll extend it up. And this is showing me
the
levels for the day. Okay, but obviously if I'm not trading the daily chart, I can flip back to, let's just say, 1 hour. Those levels are still here, and it's like drawing those Fibonacci extensions within Fibonacci extensions. Like in this scenario here, actually that's a bad example on 1 hour because I don't have a real low bottom or a real low top. Actually, let's use it on a smaller scale here. Okay, let me just fix this up this way. Okay, if I was to, oh, now it's looking like something. Now I can basically find a low from here and extend it back up again. So you can basically use the tool on any time frame you wish.
Okay.
Okay. So let's just say, for example's sake, I'll try to bring in as closest to the present as possible to give you a example of what to look for on, let's just say, on this chart here. 15 minutes, if I could just make that smaller. The previous low on this one was right here. So in this sense, I'm going to do it from here, extend it to the highest top here, and that gives me where the market is most likely to be heading, as in going forward from this point. Until there's no rebound on this point to go up, at least a little bit, I can't really draw one going in the opposite direction. Actually, I can show you maybe on this point here to the bottom, or even actually, let's try to try this on the other side. It is because the trend hasn't finished, therefore it's not going to be 100% the way it should be shown. From top, where are we? Right here. From this top, and let's assume that this is the bottom. Okay, so you draw it that way. Now, if, for example, this actually is the bottom, the first retracement where the market's going to be heading, obviously it's going to be towards the 23.6, 38.2, or 50, or 61, until it gets to 100. Do you get what I've just shown you here?
Well, I've seen. I just like to know going forward. Is it going to go down or going to go up?
Okay.
That's what you know.
Obviously, you need to have a point that actually has rebounded. Obviously, right in this example here, that's what I was saying earlier, that this example here, it's not 100% at this point whether it will go up, as there hasn't been enough movement, the initial movement, to confirm that this trend has changed. Like usually what I usually do, if this was the case for me to go up, to actually even enter this trend, I'd draw a trend line, and to see, this is the first point of touch. So really, as you can see on the trend line, the price has not penetrated this line. Therefore, I wouldn't have drawn the Fibonacci extension at this point until I have a closure above this line to confirm that this bounce off from here has crossed the trend line for me to trade it up. Does that make sense?
It does, but sure, okay.
Like, I obviously trade by trend.
But it's
Therefore,
still on a 15-minute chart, yeah.
now go on.
No, I'm saying, I hear what you say. So you do your trend line first,
Yes.
and then the Fibonacci to see which way it's going.
Okay, Fibonacci, I only draw the Fibonacci, let's just say this way, if the price has went over my trend line. Otherwise, this Fibonacci is no good because, one, the price has not penetrated the trend line. So these Fibonacci lines are not then they don't serve the purpose because the price has not rebounded at this point. The only Fibonacci I might look at a short term is right from here to here. In other words, from this point here to this point here.
Yeah.
Okay, so now this is a valid Fibonacci. So where's the price going? It's gone. It's even gone past 161. The next support level is right here at 261.8. So most likely this price is not going to do anything until it most likely hits this level here. Okay. And
so after 161, you go to 261. But surely you would think at 161, you know, I mean, it's really dropped down. Can it go lower? You know, or, well, it can. I mean, you can see that it has.
Look, it basically can go into infinity. You know what I mean?
Yeah.
Basically, it can go further than that. So obviously, there's another level past that level. That's what I said. When you're looking at the ratios, it is ongoing. It is always a number. It's like a square root of each number to get the next one and the next one and the next one to work them out. So really, I mean, in this case, obviously, this was the low, so it is the correct what we've done here, and extended to the highest point of being after this point, which actually should not quite 100%. Let's make this like to be exactly right there. Okay, so as you can see, the market each time is sort of stopped around here, you know, support, a bit of a resistance. It fell through and found resistance here. It went sideways. Again, support, tried to get out, support. He has found support for quite a bit of time, and then it fallen. And again, there was a bit of support around the 161.
The forces also determine our volumes. You've got to look at volumes at the same time.
Look, I don't really use the volumes too much, but it somewhat can give you a clue. Yes. As you see, all the big dips and moves you actually can see a bit of volume in here. But I mean, 15-minute chart, I don't know whether you're going to see too much of the volume. I mean, yes, in this example lately, yes, there is, because if you look at each volume tick, you know, right at the bottom when it starts going off. This one here, right at the top. But what's a bit sort of hard to say is like, just, okay, in here is an example of it going up. And this one here, example of it going down. So what do you do when you see the top in here? Is that means it's going down? Do you know what I mean? And you find another top. Is that means it's going to go up? Yeah, it went up a few pips, but then it crashed back down.
Yeah.
So it's a bit hard to say, okay, I'm just going to look at volume and go for it. On the higher time frames, you might notice that sometimes that might be the fact, especially on a long term. Here, probably not much. As you can see here, it's all high volume. I mean, is that it's going up? Then why is the market coming down? Do you know what I mean? You would have to probably know which is the bulls and which ones are the bears. But if you look up even higher, I've seen it a few times happen. It doesn't happen all the time. Like in here, you would have seen at that point that the market, that there was a big institution, there was a lot of market during those times, during these months here where you went sideways, where the price actually just crashed down. So
Yes.
in this example here, looking at a monthly chart, yes, that's a good example. And there you go. Let's just pretend that this is a 15-minute chart, just for the sake of this. It all applies across all time frames. Okay? So let's just assume that this is a 15-minute chart. I'll get rid of the other Fibonacci. Delete. Okay, so we're assuming that this is a 15-minute chart just for the sake of it, because it looks good that way. And we're taking it from a lowest low to the highest high, which is right there. And so now we're looking for at a monthly chart. And so we know that most likely this price will keep on going down till it hit the 50 level at 121,690. Okay, might not quite get there, might go to the, like I was saying, that 80-20 rule.
Pretty close.
Pretty close. But as you can see, is this line actually pretty solid? It's been here before. It's been here before. It found resistance in these levels and support. Right through here, you can see a lot of them are stopped at that time. And if you probably extend it a little bit further, you'll see that they'll match up other support resistance. So yes, I would say that this is a pretty solid line. You might not get there in a month or 2 or 3. Who knows? You could get there maybe in a week even, whether the next month starts on this next bar, and it could just come down to here, and then we just have to wait what the market's going to do. Is it going to rebound? Whether it's going to go sideways, or whether it's going to crash down again. Does that make sense?
Yeah.
Okay.
Absolutely. It gives you an indication. I'm just trying to go. Is it best to work it on a daily chart, or is it best to work on a 15-minute or an hourly to give you the direction that what's going to happen?
I'm a technical trader, therefore I don't really worry about what's going on in the market. I don't read any of those things. Now and then I might look at what's happening, as in announcements and stuff, but I'm not really concerned. I am a technical trader, therefore I'm a trend trader. Now, if the question you said, what should you look at? For me is this: I trade the 15-minute charts. Okay? Now, I look at what's happening in a 15-minute chart. Okay, you can quite see here that it's a downtrend. Well, somewhat it's going sideways, but it hasn't penetrated the downtrend line. I can make this a little bit more aggressive by drawing another trend line now from this point to another meeting point that meets, which will be this one here.
Yeah.
Okay. And that might say, oh, okay, it has crossed it, but it's still falling. Therefore, I wouldn't really trust this crossover here. Now I would actually be concentrating and maybe draw a couple of lines to see, let them get out of the channel first before I decide what am I going to do. Being a support in here, probably move it about like that. And that should be enough that way. So most likely the price might go sideways today until there's, I think about 11 o'clock, there's some kind of a UK released. So that might move the euro.
Different activities, early in the morning and 11 o'clock.
11 o'clock, I know there's one at 11 o'clock and there's I think 3 in a row.
That's America. That's Eastern times, 11 o'clock.
Yep. Well, in 5 hours' time, when I looked at the calendar last.
Okay.
Okay, so I would not do anything in here to, let's just say, to buy, because number one, 15 minutes, it's still telling me it's downtrend because it hasn't crossed over this line. Market seems to be going sideways for quite a while now. Now, if I want to confirm, 1 hour, it's down. daily, it's definitely down. So the only position I'll be prepared to take is sell. Because I know that even though if I get that direction wrong initially, I know that maybe in a few hours time, few minutes time, maybe a couple of days time, I know that the market will go down because the higher time frame is actually telling me that the market is and will keep going down. Does that make sense?
No, absolutely. I see
Okay, that's why always, like I say, you know, trend is your friend. So play along with a higher time frame. Never try it against. I mean, look, I'm not saying that the market might not go up and go maybe a few pips, but it might just as quick turn around and go back down.
Yeah.
So I rather not take a trade when it looks, oh yeah, it looks, you know, a bit of a power player going up. I rather wait for the market to settle in and go back down. It is just like when you sometimes see you're looking at the UK market where the market goes one way and then the American market opens and it usually goes the other way or continues through or goes sideways.
Correct. That gives you the indication which way it's going.
That's why the best time to trade is actually, you know, wait for the UK market to open, give them half an hour or an hour, establish the trend, jump on, stay in before the American market comes in. Long as there's no news releases to you know, to throw you off, and then just get out. And then again on the American, as soon as you find that it's okay, now it's reversing and or continuing, you either stay on or, I mean, not stay on, put on another trade, or just play it the other way. But like I said, I would always continue to only trade in the direction of the trend.
Okay.
And like I said before, previously, looking at this, if I was to assume that this is the bottom of the market, I would use the Fibonacci extension from the top, take it down to here.
So just an extra tool that you're using.
Sorry?
Just an extra tool you're using.
That's just an extra tool, yeah. I mean, look, I personally, to be honest with you, I actually draw support or resistance lines myself.
Okay.
Okay? Some people find it a little bit hard to draw their own support, as in, you know, they might get few points right, you know, bottom, top, in between, because you need to really go from a month, weekly, daily, for maybe an hour, 15 minutes, and draw whole heaps of lines across your chart. I'll show you one of my Euro USD, what that looks like. This is my chart here. See, you know these yellow lines? That's all my support resistant lines.
Okay.
And not all of them are seen at once, because obviously if I'm looking at a 15-minute charts, until the price gets there, I don't really care. As you can see here, there's a line right across here, and the price has been just like a snake curling around it. Support, resistance, support, resistance, support, resistance. There is no market direction until at least it penetrates that line here. It seemed to be finding on this previous trend line that I drew, that's like I've showed you in here, where it was tight. This is just like a smaller version of my chart in here.
I also prefer candlesticks.
Yeah, me too. I prefer candlesticks too. It's a little bit easier to read.
Yeah.
Although I used to be always the other way around until I got to really understand the candles and what it's a lot more. I think myself it's a lot more easier to actually read the candles than using the price bars. Yeah, it just, I suppose, just takes a bit of use to, and you can actually understand.
No, that's what it is, what you get comfortable with.
You know what, it's a more clear picture, because you're seeing, let's just say, I mean, that could be any color, but you're seeing the whole picture. You're not seeing the little wick on the side, the little start price and end price. You're seeing actually the whole movement of the bar.
Correct. Over that period.
Yeah. So that's sort of pretty basically how to use it.
How many trades are you looking at a day, Lucjan?
Sorry?
How many trades are you looking in a day?
How many trades? Look, while I'm here in the office, I might do maybe 1 in the morning, and I might do maybe another 2 later on at home. Obviously, during the day, it's like, you know, the Aussie market, it's flat, as you can see. Flat, flat. It's the only risk. Although I took a position today, I was going for actually 10 pips. It nearly got there, but it didn't quite get there. It reversed, so I waited till it get a little bit more, and I've taken a bit of that, which was basically here. I took it the Aussie USD, as you can see here. I've taken it this morning. So it wasn't a really big trade. Like I said, it has reached to the full 10 pips, and then it reversed on me, and I was waiting, and I couldn't wait anymore, so I go, bugger that. I'd rather close it in profit and walk away happy than wait for something that might happen or might not happen.
Correct.
So if you look at the Aussie, it's you know, really unpredictable what was happening in here, and I just wasn't sure.
It's a lot of volatility.
Sorry?
I said a lot of volatility. I've just closed my trade.
Yep. Yep.
20 pips.
Yeah, the Aussie, who knows what's going to happen. It is definitely a downtrend, heading down. The level's been, you know, and there's my Aussie chart. As you can see, all the yellow lines are support. Red lines, obviously, trend lines. So it is right now stuck on a support line. Yes, it could go to the next line here, or you might do a bit of a bounce off for a bit. But until it goes over the trend line, I will not buy it. Anything I wait, it might come around here, and then it'll probably bounce back down again. Now, with the Fibonacci extensions, or retracements, as I might say, or ratios, whatever you want to call them, the important ones I always tend to see is the 38.2, the 50, 61.8, and 127. Somehow the market always goes to those lines, and you can go back and put it on the chart back and back and back, and you'll always see the market's always behaving along those lines. If I could go back a touch. Let's do a little one here. Objects, take this Fibo off, take that Fibo off. And let's just presume this is the bottom and this is the top. Okay. As you can see, the market obviously collapsed. It's gone sideways around the 38.2, sideways around the 50, quick drop down to 61, retraces back to 100, and then again around that 27, it sort of tries to find its way to the next level. I mean, this one actually went a little bit lower, but the 27 level, you'll find a lot of them matching up to the 127.2.
120.
Yep. And it's just like a, you know, never-ending story.
You got to use it if it's helping me understand it. That's when I'm going to use the Fibonacci as a tool.
Yep.
To see in which, if it's...
It basically, it is a tool. It's not an indicator. It is actually a tool. Tool to gather information of, okay, where is the price going to go? Where is the most likely point where it's going to test and or find support and or resistance? That's the best way to describe it. Like saying, why is it so? Human nature. It's been done for years and years, and a lot of people use it and respect it, and that's why it always repeats itself. It's just like if you didn't use the Fibonacci, for that matter, objects again, delete, right? If you look at a monthly chart and you went to draw, support resistant lines, in a few places, you notice that, again, it's the human nature. It's been here, it's gone, it's coming down here, it's been here. You know what I mean? It always repeats itself. That's why Fibonacci, if I was to draw all my lines, support resistant lines, and then put over a Fibonacci tool over it, you'll see that the Fibonacci will match very close.
Making sense of.
Sorry?
I said it's making sense of your support line.
Yes.
Just show me how you got your support lines, how you did your support lines.
Okay, right here, you see that horizontal line?
Yeah.
You press that button.
Yeah.
Then obviously put your cursor, it's got that like a cross and a line. Put it at, let's just say, right on the top of the bar, and then you press the left button, and it just appears.
That's all.
That's it. And then you just go for it again, and put it at another place. Press the button, it appears. You might not have the pop-up box. I've just got it set so the pop-up box always comes in because I keep on changing colors sometimes.
Yeah, no, I have it. I do have it.
It's a little bit annoying, but so basically wherever you want it, if you want it under here, you put that cross and a line, press the left mouse, and bingo.
Okay.
See, if I was looking in here, and if you go back, you'll find resistance, support, resistance. It's human nature.
Yeah.
And Fibonacci, basically, that's the ratios of Fibonacci. Yes, they get overshot a little bit. Obviously, you can't have anything 100%. But that's basically how everything works.
Not a perfect science.
Well, that's it. That's it. Here if we're to, oops, damn it.
And which icon are you using for trend line?
Trend line, this one, whoops, let me get rid of this. Trend line is this one here. It's actually called trend line.
Trend line, okay.
Yep. If you don't have those, then you go to View, Toolbars, and look at the line studies. Okay. Make sure it's ticked. Although you should have all of them ticked. Standard, charts, line studies, periodicity. That's all the tools that you can see on the top of the MetaTrader.
Yeah, I've got all of them. Okay.
So that's...
I've learned something today.
Well, there you go. Look, you know what? You always pick up a tip or two, you know what I mean?
Absolutely.
I myself, I'll admit it, sometimes when I see some seminars, you know what, those freebies, obviously I don't go attending seminars because I've been there, done that. Sometimes you might pick up something, people see me there, they go, oh, what are you doing here? You trade, you're doing so good. Just having a look. Do you know what I mean? Sometimes you always might pick up a little gem that'll make the big difference.
To refresh something that you know.
That's right. That's right. So look, that's basically it. There's not much to it. Extensions, remember, bottom to the top, or from the top to the bottom, depending. Once it finds its support, then you do from the top to the bottom. If it's bouncing off from the top, then you go from the bottom to the top.
Okay.
And that's basically it. If you have any questions, I can obviously.
No, I'm good. I've learned.
You're good? No, that's perfect. That's what I like to hear. We already done the questions. And all I can say is thank you for attending. And if you've got any more questions or
chat,
anything, just feel free to contact me, Merv. I think you're due in actually for me to call you in a day or two, so we're going to have a chat then.
Excellent. Let's see what's happening. Interesting time.
That's it.
I like the volatility. I've been successful the last couple of